So I was shorting this obviously above the concept I taught you guys in the previous video, the CVD divergences, and I shorted this twice actually. Both of time I failed, right? So let's just go over why I think I failed right here, okay? So obviously last Friday we had a massive downtrend, and after that we shifted obviously the local market structure bullish all the way, right? Now this is the first divergences that I noticed right here. I tried shorting this with my stop above this level, which was obviously stopped out over here. I was trying to go below these lows, but you know, listen, which one is this? This one? Yeah, right, this one. So I got stopped out of this, obviously, and the reason I think that happened is because let me show you guys. Yeah, seems good. So let's start from the weekly open, right? You have high rise, high lows, high rise, high lows, high high, high low, high high. I wouldn't really consider this anything. This I would consider a high low, but this and this I would not consider anything because again this fractal failed to break above this high and this fractal break failed to break below this low, right? So I wouldn't consider any of this as a fractal. It's just kind of like a correction if you know Elliott waves, right? Now this one I would consider because it obviously broke the lower fractal, which was right here, and from the lower low. So from this point onward, right when we broke this low, we switched to bearish market structure, right? And after that, let's see, massive downtrend, a little bit of pullback, some redistribution, and then obviously we come down, right? Okay, this is one big move down, right? And I wouldn't consider any of this. I wasn't considering these as like market structure shift. I just like for me this to this is a single leg, right? This is a single move, but the way I think about it now is like, okay, this is a single move, this is another, and then obviously we have this, right? Let me go ahead and remove the div so it doesn't get confusing for you guys here. Yeah, so now the reason why i I think about it this way now is because this is a massive move down, right? And if you're building value, let's say you want to shift market structure, right? We obviously saw that as soon as we broke this fractal right here over here, right? We broke this high here. So now I consider this a market structure. Before losing these two trades, I wouldn't consider these a change in market structure. I would be like, okay, this is one leg down, this is just a retracement, and we are gonna go down again, right? We are going to break this low. But now I don't think that way. I think that okay, because we have a fractal here, and since this was a massive move down, and this could be just considered a retracement, this fractal right here, I'm still considering this a lower high now. Okay, previously I wouldn't consider, but now I'm considering it. So the new theory that I go with now is okay, massive move down, another higher low, another lower low, right? And then we obviously break this, and we have a high low, and then a high high, and then a high low, and then a high high, from which we fell down. Now, why I think we didn't fall down upon these highs is, well, there are a couple of reasons. Number one is obviously if you see the Fibonacci retracement of, let me just real quick. Yeah, let me put it again. Yeah. Right. So if you trade USD or any other asset in general, now in some cases it bounces off the 618. But what I have found personally on lower time frames, especially in Euro USD, it usually bounces off of this area, which is like the 0.75, 0.66. This is the area it bounces off of for a continuation of trend, right? So this is more like a local structure, and this is more of a higher time frame structure, right? Let's say like a 15-minute. Yeah, massive move down. We shift market structure here. We had a fractal over here, right? On the 5-minute. This is the 415. 415, 415, 415. Yeah, around here, right? Now on the 15-minute, you wouldn't say. On the 15-minute, this is a this is what? This is a lower high. This is a lower low. This is once again a lower high and a lower low. Okay, so it's essential to be aware of all time frames, right? What's happening with price on every single time frame, because you didn't have that fractal forming on the 15 minute, but on the 5 minute you did have that fractal forming. So now why I think these trades right here did not work out was simply because we broke market structure here. We shifted this, we made a higher high, a higher low, and then when we tried to break the 15-minute market structure, which was right here, obviously. Let me put ahead in Fractals, right. Let's go ahead and put the Fibonacci as well. Right, you guys see now, this is one single leg down, one single leg up, and another leg down, right, breaking the previous day low. This is on the 15-minute, but on the 5-minute you obviously had this fractal. So as soon as you broke this fractal on the 5-minute, locally on the 5-minute you are now in an uptrend, right? On the 15-minute, sure, you are on a downtrend, and as soon as this, you'd be on the lookout for this level. Sometimes even zero 0.5 can have a big move down or a big move up depending on the trend you're in. But sometimes it's, most of the times it's just 0.75 or the 6.6, right, somewhere around here, which in this case obviously was. So yeah, locally you are now in an uptrend, and as soon as you try to break the 15-minute downtrend, you got rejected, and the CVD divergences, which I was talking about. Let's go ahead and delete this so it doesn't get too, yeah. So number one, I shorted here because I was like, okay, because you have to remember, I wasn't considering this a fractal at the time. I wasn't considering this that okay, this is now a higher high locally on the 5-minute. I was considering this a simply a lower high, so which is why I shorted this, and that obviously didn't turn out so well, right? And then once again, I still wasn't considering this a lower high. I was like, okay, this is one single move down. I wasn't considering this zigzag, but now I am. Previously I wasn't. So obviously, since we were in a local uptrend, we once again broke above this high as well, right? And we put in this high. Now this is where we try to break the 15-minute market structure. This Fibonacci is more of a 15-minute, although I'm showing it to you guys on the 5-minute. This is a 15-minute Fibonacci, which I just showed you guys here, right here. Yeah, so that is why I think this trade didn't work out, and then this trade didn't work out, and then it finally worked out over here, because now you obviously have the 15-minute on your side, which is the higher time frame, right? This right here. Let me just, yeah. Also, we are at the 7 a.m. 7 a.m. is when volatility starts massively increasing. If you look at any historic price action, let's go 7 a.m. right here. See that little spike in volume below? I actually created a sheet for gold, making like a volume influx analysis. I want to do the same for Euro USD. I'll probably do it today, tomorrow, somewhere, right? Because when you have this volume data, you know when the volume is going to come in, when the volatility is going to come in. You can just log in during those times, maybe 15-20 minutes before the yield analysis, and just sit on your computer. Because I was sitting at my computer like all the way from fucking here, right? That's like what, 2 hours, 2 hours, two trades, both of them lost, right? And as soon as I lost this trade, I was like, oh, fuck it, I'm not gonna sit anymore. I'm just like, I'm gonna trade New York. I probably won't be trading London, but as soon as I logged off my computer, right, I log in again and I'm like, oh wow, there's a move. So yeah, this is how now I use fractals. I'm probably going to backtest this strategy once again, but we'll see how it goes. And anyways, that's it for this video. See you guys in the next one.